Welcome to RealCast. I'm joined today by Dan Innes, Ron van Bloois, and Courtney Fingar. And we're going to look at the year of 2023 and I guess see what that means in terms of 2024. Dan, let's kick off with you. I guess, what's your overall take on the year?
Overall, I think it's been an interesting year that's seen us travel through many different emotions of 2023. We've obviously been dealing with a lot of financial volatility, interest rates and inflation, hopefully beginning to get back under control. Still, we've been dealing with the knock-on effects of the Ukraine crisis. Israel has come onto the dashboard as well. But we have been seeing those kind of themes. The RealCast themes that we've been following, like ESG, and that's been popping up all the way across those different events. And really, I think we all commented earlier this year how we all felt slightly a bit confused at MIPIM. We weren't sure. Some people were sipping champagne, other people were head in their hands. But really, kind of as the year progressed, people began to sort of find their feet. I mean, there was a bit of an interesting phrase, which I quite liked, which was people were sort of extending and pretending to do good business in 2023, and that maybe they were pushing it into 2024. But by the time we got to Expo Real, MAPIC, ICSC in New York I was at, I really kind of sensed that people are beginning to sort of line up some investment deals into 24. Things like Blackstone and Digital Realty joint venture, £7 billion going into data centers in Europe and in the US. I thought that was quite an eye-catching story. And of course, only this last week, we've seen LXI and London Metric lining up merger talks, which will be absolutely incredible, bigger than British Land. Yeah, I mean, there were a handful of transactions in 23 that we saw. Reiner's Entrum in Essen with Eurofund acquiring that, and also Angelo Gordon and Kintyre buying the Kant Centre in Berlin as well from Credit Suisse. But all in all, retail, I think, is going to actually ironically bounce back in 24. I know we were all saying that European retail has been relatively strong. Seeing some of those exchanges happening in Paris, LVMH buying 150 Champs-Élysées for nearly €1 billion. There's got to be a bit of confidence coming into that sector. And clearly people like CBRE think so too, acquiring CWM, and Savills acquiring Nash Bond. The retail side could be the market to watch in 24, but that of course does leave the sort of the sore thumb really is the office market, and certainly people really trying to earn the commute of their employees now. There is a bit of a flight to prime and a flight to sustainable office development. There was that Collier's report that showed that there is still a lot of speculative office development, some 7.7 million square feet of offices in a pipeline. So, I think there are signs of optimism for 2024.
Yeah, I think the discussions around the sectors has been really interesting in the way that that's changed over the year. And I agree, the alternative sides, things like data centers coming much more to the fore, but also areas like science and innovation parks, advanced manufacturing, those kinds of elements that really haven't been an active part of the discussion going forward, will be, I think, and there's much more of a focus on those. And interesting that view around retail, where a lot of the people in the market that I'm talking to, know where retail is. So there's less downside there, whereas office, there is a great deal of uncertainty, but for sure the focus on sustainable office and the lack of development at the moment means we're only likely to have, more of our divergence there, I think, in terms of the office sector. Interestingly as well, from my side, we've been running the Outlook series, big focus on debt, but also we were in Paris and in Frankfurt, and the view's very different. Quite a positive view, actually, from Paris, but maybe that's linked to the LVMH story there as well. But of course, there's the Olympics coming up, and there's still big infrastructure projects helping drive the market there. But interesting research presentation, one looking at the debt gap, and therefore from Irene Fosse at AEW, and also a more positive take on when the market might come back. But also an interesting one from Marcus Seelebeck of Patrizia, just highlighting that actually interest rates are still relatively low in historic terms. And of course, there's no reason to believe that there isn't a positive future for the sector going forward. It's, simply a change and back to fundamentals in a lot of respects. Courtney, we were both at the WIPA conference, and it was interesting actually towards the end of the year then, just take a completely different view with, the UN and with countries and various others, looking at some of the broader pictures related to the built environment. And what was interesting for me was the confidence there, but also just the focus on sustainability, whether it was sustainable development goals, but also how important that is for the built environment. A lot to learn, I think, there for the real estate sector.
Absolutely. And WIPA is, of course, the World Association of Investment Promotion Agencies. So this is the global body representing those government entities charged with attracting foreign direct investment. And it's been a very rocky year in the FDI world. 2022 saw a 12% decline in global FDI inflows. There had been big hopes of a recovery in 2023, but the recovery party got a bit spoiled by continuing crises of the geopolitical order, of course, lingering war in Ukraine, then the outbreak of war in the Middle East, and also just continuing geoeconomic fragmentation, which we're seeing quite a polarized world, and this is causing tensions and causing economic stresses. So the recovery didn't happen. And now the big agencies, UNCTAD and so on, are now worried that we won't see FDI increases when they close the books on 2023. But what's interesting, and it relates to your point, Richard, is that there doesn't seem to be a panic. So for these investment promotion agencies, it's really tough times because there are just fewer projects to compete for. And you might expect that they would get a bit desperate and take their eye off the ball in terms of sustainable development goals, but they seem broadly committed to their sustainability objectives, even in this tougher market. And that is something that we'll obviously be continuing to explore in 2024 as we sort of connect the dots between sustainability in the real asset world and the goals of FDI agencies.
I know, Courtney, you were also at COP. Ron, what was your kind of takeaway from that? And also as chair of the Senior Housing and Healthcare Association, what had been viewed as a kind of niche area, but because of the rise of the focus in general on anything around living, a bigger focus there.
Yeah, let's start with COP28, because I think one of the festive moments in December of 23 was COP28, where we have consensus about the transitional path. So we run the very successful session at Dubai Silicon Oasis, where one of the key topics was collaboration. And I think that's really a driver between the built environment, that we see much more alignment in also having the right legislation in place. The entry of the CSRD this January 24 is quite important to have a clear legislation also on reporting. And we do believe that, of course, built environment, we have a huge stake in the climate change. So also in terms of being responsible and accountable, I think the built environment is now ready to also make their transitional path from the existing talk to the new updates. When we look at senior living and healthcare real estate, it ticks all the boxes on ESG. And I think especially social impact is going to be the game changer. However, I think 23 was a challenging year for the sector. And when we look at deal flow, it was very limited. And also the pressure on the operational side of the business, that's something we should take very seriously. Because when we look at the financial health of operators, it's under pressure. But I'm actually positive in terms of the focus on longevity. And when we look at SHHA, we had the first summit in 23 in Brussels with the European Commission. We did the launch of in-depth webinar series, where also we do a lot of cross-border knowledge sharing between US and Europe, for example, in how can we create livable cities where also aging is in place. So like having the right facilities on the living side of the spectrum, having specific nursing home facilities. And I think that's the way forward, also to have a broader discussion on the municipality level. And I think that's fairly important when you look at ESG. When we would like to measure social impact, it's not solely on the asset level. So we should have a more interconnected approach between the PropCo and the OpCo. And that's, I think, again, the key word is collaboration between asset owners, the parties who are running the operations, but also stakeholders like banks, insurance companies, etc. So this interconnected way of collaboration, and I think that's both on SHHA and Impact, that's the way forward also for 24.
In terms of impact, it's been encouraging to see a bigger focus there. And I was very pleased to be recognized again by the Aviva Sustainability Media Awards for the Impact Journal. And great that Aviva are doing that kind of thing and really helping push that forward as well. Interestingly, big focus as well around the Middle East. Certainly when I'm looking at MIPIM and who's going to be exhibiting there, seems to be a huge amount of activity. And Courtney, what's your take on that? Because you're obviously in the Middle East quite frequently. It'd be interesting to get your take as well on COP.
Yes, well, the Middle East, in particular, the Gulf, is the hub now of the FDI world. It's why most of the major conferences in the FDI community are taking place in the UAE. And Dubai is actually the world capital of FDI now as a destination, but it managed to overpass London and the European capitals. But it's also a major source of outbound investment. So I was really pleased that we hosted our impact roundtable there. If we're connecting the dots between FDI and impact, it has to be there. And there's also, of course, with hosting COP, shows the interest in the Gulf in sustainability initiatives. Obviously, it previously lagged behind, but there are a lot of initiatives going on to try to put sustainability at the heart of the rapid development. And then, of course, you have Saudi knocking on the door, very, very actively trying to challenge the UAE as an investment destination. So I expect that going forward in 2024, the Gulf will continue to be the hotbed of activity in the FDI world.
Great. And just in terms of activity, returning to the market, what does everybody think? Are we encouraged that it's going to be in 2024, or do we believe that it's, survive until 25, Nix in 26 and heaven in 27? Where do we think we'll be?
I think there is going to be an improvement in Europe. I think, as Courtney said, I think the Middle East and in particular development activity in Saudi Arabia is really pushing forward. I think a lot of those projects that we've been seeing coming right across everybody's LinkedIn accounts for the last 2 or 3 years, a lot of those projects actually, making significant progress. But I do think there will be signs, some positive signs of progress across Europe as well.
Well, in terms of FDI, I'm still hoping that we will see the green shoots of FDI recovery. If it happens, it may be a tepid recovery, but a recovery nonetheless. And even in these difficult times, there are a lot of opportunities for countries, especially developing countries, to claim a new position in the fast changing global value chain. So that can be actually very exciting to watch.
Great. Ron, positive take from you?
Yeah, I think I'm positive, but we do see a variety, I think, in European countries. There will be a big difference between mature markets and the more emerging markets. But I do believe that, especially on ESG, the wish for investors to outperform and also the maturity of the asset class is there. So it's no longer alternative. So, Richard, this is the last time we called it an alternative. I do believe it's outperforming, and we will see a repricing set. And I think that's crucial, and because we need to have a clear view also on like senior living side and more specific side. So no, I do believe that we will see a recovery, and also driven with ESG regulation. We will see a need to get a very Paris-proof stock, and also this type of portfolio refitting is here to stay, and it will increase over time. So I'm positive.
Great, and from my side, I'm endlessly positive, but also I think there is an element of realism around the market at the moment, which is good, which is that, as pricing comes together, market activity will begin to build again. So I'm a little more encouraged. I feel heaven may come sooner than 2027. Let's hope so anyway. Thanks very much, everybody. Thank you for joining us, and look forward to seeing everybody across the course of 2024. Thank you.